Good afternoon, ladies and gentlemen. Well, glad to see you all here. I actually find this is a very interesting topic, and then with all the interesting speakers. Well, on my right, you can see Iris is actually more from an investor perspective. Iris Lee, investor director from Ant Finance. And then in the middle, we actually got a gentleman. This gentleman is my former colleague, managing director of corporate finance of Deloitte, Ivan Wong. Then we actually got a professional service firm representative. And the far end, we actually got my sis, Viola Lam. Then she's her representative from startup. Then more from the Cyberport Startup Association chair lady. In this sense, we may actually get different angles and perspective from different stakeholders. And, well, allow me to use my cheat sheet. And it seems like the market situation is very bad, a bad economy, bad all the time. And then whether this is a good time or to do investment, what does it impact the emerging technology and fintech? But on the other hand, it's kind of interesting. According to the Master of Science I'm studying, and during the M&A global trend, it talks about, well, by theory, this is buy low, sell high, the best moment. Because in the M&A cycle, in this kind of bad economy, it's, well, the best timing, well, to buy low. There are lots of good companies, or with low or lowest valuation you can buy. Then with this contradictory viewpoint, then maybe we can actually start with the investor. What do you think, Iris? In this sense, with such a bad market situation and negative sentiments around the world, how does this affect your business or even your investment directive?
Yeah, thanks for the question. So I think pandemics impacts us, in every ways. And we've seen a rising trend of in the payment world that a lot of the payments moving from offline to online and cash dominant to increasingly digital and inclusive. So I think in that way, it's a silver lining of the pandemic. And so with that said, we actually see this as an opportunity for the digital payments. So I think from an investment perspective, it's always wise to keep a close eye on the capital market and to leverage the cycles. But as a strategic investor, we are more tuned to our business strategy and also our shared vision, which is making small yet beautiful changes. So that's how we search for the target companies. So I think recently, as you can see, we've had a strategic partnership with 2C2P, which is the regional payment companies. And then that deal enabled us to be a majority shareholder in the space, which we join hands to accelerate the digitalization of payment in Southeast Asia. And in August last year, we also invested in Chop, which is F&B food tech company. So that is also to accelerate digitalization on the F&B sector. So I think we take our own pace. So in the turbulence of the market, yeah.
Wonderful. Then obviously you are taking the opportunity to buy low. Okay, Ivan, what do you think?
I think pandemic alone, we don't know when exactly it's going to end, but the most immediate impact that we're seeing affecting fundraising these days is actually the capital market, because a few years back when we were, because this is actually my role, because I don't get to decide who gets money, and then I'm actually standing between the buyer, the investor, and the sellers, which are the companies. But the trend that we're seeing being changed due to the pandemic or the recent downturn in the capital market is that a few years back, a lot of all these companies, startups, or emerging businesses, they have a very optimistic business plan. They probably have multiple milestones ahead of them, but the last milestone that we're seeing is being profitable. What they're planning to do is they want to do multiple rounds of fundraising and then keep diluting their shares, and at the end, they go for IPO and then just keep everyone happy with high valuation on the stock market. But with the recent downturn and recent geopolitical situation, it's actually removing a lot of the exit options. The best market for all these companies to get listed. NASDAQ is getting very difficult. It's very challenging for Chinese companies to get an IPO done there. And then at the same time, if they came back to choose Hong Kong market, like a few years back, like it may look like a good opportunity for the Hong Kong capital market. But as we have seen these days, even if they choose to come list in Hong Kong market, it doesn't really give them the same valuation or liquidity that they used to have in NASDAQ. So I think in general, from the perspective of fundraising, I think a lot of all these businesses that we work with, they're getting a lot more realistic. So instead of planning for endless cash burn in the next few years, they're actually being more conservative, and then instead of having a cash burning forecast for the next 10 years, they're actually planning for a lot earlier kind of break even. And then at the same time, they are actually much more open to letting go control. Because, I mean, in the past, where they're all getting money from financial investors who are actually getting minority stakes, those financial investors are probably not going to help them that much in terms of the operation, because they're all minority shareholders with a very small stake in the company anyway. So what we're seeing as an alternative in the market is that a lot of all these businesses, they're actually talking to strategic investors. So they may not give them a high valuation, but they're not cashing out either. And then these new investors who are actually in the business actually can help them a lot, because a lot of them, not only fintech, but in the TMT and high-tech space, we're seeing a lot of companies who've been burning a few years of cash with some good result in R&D. But I mean, they were expecting new money coming in to help them commercialize the products. But I think with the capital market kind of dried up. So they actually turned to strategic investors to come in, not only to give them money to fund the growth, but actually give them a lot of help in terms of building a network with the market and trying to commercialize the product. So I think that there's a very, very practical move with the entrepreneurs and these emerging businesses. And I think it's a healthy development, because I think like the investors and the company probably cannot really count on the capital market or IPO as an exit option anymore.
Thank you, Ivan. Then, like we were saying, it seems like the liquidity and even the funding may be a little bit tight, whereas there are still opportunities in the marketplace. And Viala, what do you think?
So today I'm like on the other side of the corner, but seeing from startup side. So literally, I'm running a startup. My company called Find Solution AI. I'm a CEO and founder. The core thing from, especially after pandemic, I say is after. I hope it's going to be after. Let's put it in that way. But the point is, after 3 years, especially for startup running during COVID, that everything's changed. Especially if you're working on high tech, AI, things like that. Everybody before COVID, they're using a lot of fundraising, burn a lot of money, get a lot of customer as much as they can. But the point is, now after the whole thing went up, so what's next? So it comes to the end to a startup is, what is your business model? Is your business model going to be having a very strong continuity, sustainability and everything? So to be honest, for startup-wise, I will say now is a golden moment. Literally, you can expand some of your team, work with some of the M&A, find some very good founders that you can work together. So literally for our company, we're quite lucky. I'll say in that way. So during COVID, because we're working on AI, especially on education, we also moving a little bit forward on fintech for education as well. So we raised 6 million 2 years ago. And then we are raising another round and then going to have some good news very soon, telling for in next quarter. So, but the end of the game is, have the startup make good use of COVID. That's the first thing. Second thing is your R&D working in place, and then the commercialization is doing really good. And that is the core thing. So for us, literally, lately we are also working on metaverse. So in the past, AI, it's a very gadget word, but now everything going to metaverse. So is the startup make good use of the opportunity? So that is another part. So I think it's not just crisis, but it's a good time to review your company, also review your portfolio, also think of, is there any way that you can expand your business in a good way?
Thank you. Then you meant there are risks, there are also opportunities. Provided you have good projects, making good money, then the money is still going to your pot. Okay, I'll try to get more targeted questions for Iris. Can you tell us more about, the direction of your fund? What you're looking for in this kind of market situation for emerging technology? Then how do you proceed with your star search process? Can you share with us?
Yeah, thanks, Peter. So I think for us, as a strategic investor, the key things we look is the synergy, with our business and also shared vision. And the deal types varies from case to case. And then we invest from early stage to later stage. That's also flexible based on each of the project. And, on the Star Search, the approach we adopt is pretty top-down. So every year we will comb through our strategies together with our business team, like what's the focus for this year, and then what's the capabilities that we're gonna be built by ourselves, and what's can be complementary from like the external investment. So that's the kind of top-down approach that we are adopt internally. And then when we are clear about the sector or the verticals that we're looking at for every year, and then in each of the sector, we try to explore for the category leader. So just as the other financial investors, we also do the exercise to look at the scale of the target, the growth trajectory, whether it has a valid business model, right? The unit economics, whether it works, and also the team, the people are very important. So I think we have a combination of both, our internal business needs and also the healthiness of the company, like the other investors do. So that's basically how we do our search. Yeah.
Thank you, Iris. Then coming down, Iris again, to talk more about what do you think about the emerging trend? Like we were talking about the category for this year or these 2 years. Well, what kind of fintech or high-tech, in-node technologies you'll be of interest to you and to your company?
Okay, so I think what we are interested in is that, especially in these years during pandemic, as I mentioned, the transformational trend of payments, shifting, right, from offline to online. So like digital payments, this digitalization is definitely something we like. So ever since we launched our Alipay Plus, the global cross-border digital payments and marketing solution, it has already connected to like 1 billion users in the region. So that's the backdrop of this thesis behind it. So just to say, like, one thing is that merchant digitalization is one of the trend that we like. So we're like, in the pandemics, we see people, the lifestyle has been more digital and users are more tech savvy. So having that said, like on the merchant side, we believe that's also a trend to roll out in Asia. And secondly, I think, digital marketing is also something we look, on top of payments. Because we think, not only payments, the marketing needs to be more tech savvy as well. And the way payment engage with the user needs to be upgraded as well. So I think in the recent announcement, we've partnered with Studio Universal Japan and also Shein. So we've been enabled to enable global brands to engage with users in a digital way and with incentives and exclusive services in the app. So, and also I have a very good experience just outside with the cashless Starbucks. I stopped by and buy a coffee, and then the digital coupon just top up, the startup coupon top up, and then I do the payment with Alipay Hong Kong, and then $10 off. So that's the digital lifestyles I'm talking about. And then I think in a global region, I think we are also interested in we see a trend of open banking, account-to-account payment, and also banking as a service. That is to roll out the embedded finance globally. So that's the big trend of the payment infrastructure. If there's an infrastructure upgrade, then that's also something we look closely at. Yeah.
Okay, thank you, Iris. And Ivan, as an advisor, and what have you observed about the trend?
Well, actually, my job is to make the people I'm trying to help look good, and then they can present themselves the best they can, so that nice people like Iris can give them money. So I'm not choosing which sector to look at, but all I'm observing is that I started to be a lot more conservative since the last half year. But what I'm observing is that one thing that everyone looks for is that they start to like business that will survive, not depending on the next round of fundraising. So that's what I observed, because a lot of, as I've mentioned, the business itself or the shareholders or the investor cannot really count on the next round financing or even IPO for the company to survive. So that's why I'm seeing a lot of all these business plans showing unlimited cash burn, having a lot of trouble getting money. So I think we especially with the capital market pricing all these high growth stock with a much more conservative valuation. So I think the trend that I've observed is that we're seeing investors also being a lot more conservative with the recent downtrend in the capital market. And then I think the cash preservation, cash flow, and mid to long-term survival is the key for investor to choose and decide where to put the money in when they're evaluating different targets.
Thank you, Ivan. And Viola, from the supply side or the startup communities, and what have you observed other than your AI, your metaverse? Can you talk about for the startup communities in the whole, for those one still can successfully get funding?
So for the one that, especially in a difficult market, I would say in this way. So if you want to get funded, get money from investor, the core thing is not just the team, not just whatever tech that they're working on, but is the business model, is that viable? Especially, is that sustainable in the market? So you can see because of the pandemic, you can see a lot of logistic company get a lot of funding because they literally get stuck at home, right? So there's another, not just because of the environment, but the core thing is the whole thing to change the people habit and how they gonna live. So is the tech, is that related to something that daily life they're gonna use it every day, day in, day out? Fintech also, because a lot of people in the past, they believe that they invest by advisor or by banks or, yeah, I know, advisors, okay? But the point is, some of them, they literally can use some robo-advisor, which means that they can have a lot of different advice, and then it also can serve different types of people, especially for not just B2B, but more to small amount of money. I know your group work a lot about it as well. So in terms of in that kind of sector, so it's still going really good. But other than that, I would say education is also one of the good parts. The major reason why is, so after the pandemic, so there's a lot of changes, a lot of new things going to be in the market. So is the talent enough in order to catch it? Especially for Hong Kong, a lot of people leave Hong Kong, sort of. But the point is, can they pick it up on time? And so education is one of the core part that should be focusing on. So for us, we're quite lucky. Literally, we're not just working on exam practice. So in the past, we raised that 6 million, focusing on using AI for exam practice and having better learning experience for the kids. So now we are not just in Hong Kong 150 schools, so we're also expanding to UK and in Australia. Meanwhile, because of COVID, we also launching a new one, especially for immersive learning. We can see the emotion of the learner, how they practice it, not just for education, also in financial education as well.
Thank you, Viola. And maybe a question that jump a little bit, Mel does say, For some of the tech company or startup, then they do have brilliant ideas and even okay business model, but due to pandemics, they may not have impressive financial position, even at loss. And allow me to ask the investor and the financial advisor, well, any advice in this kind of situation to those startups or tech companies, even they are not financially impressive by financial position? Iris?
Maybe financial advisor?
Investor doesn't want to talk much.
Well, I always like to make money helping other people to get money. But anyway, I think the key thing is if the whole thing is really at idea stage. What I'll suggest is probably start with something small, because investors these days are very smart and conservative. Because a lot of all these VCs, they have the money dried up. So that means less competition for investors, which is bad for the company trying to look for money from the investors. But at the same time, I think, again, start with something small, because the investor probably like to see some what they call skin in the game. So if you're putting your own money in, you're committing a lot of your time, capital in it. So I think that may help convince smart investors like Iris.
Okay, thank you very much. And well, trying to conclude a little bit, say in 30 seconds, what are the key points from a perspective you can advise the startup companies? What should they do? Iris, any advice?
Yeah, of course, I think being disciplined is the whole thesis, and we've heard a lot, right? And from investor perspective view is that we're coming back from no matter revenue multiple or dream multiple back to like profitability, right? So that's why the question comes from. So yeah, I think, from an investor perspective view, we will really look in details, like why is it, not look that great, right? Whether it's because it's still in early stage investing in technology or people, or it's because of like business model wise, it's still cash burning, and whether it has a path to the roadmap to break even or to profitability. So that is very important, when, the startup is looking how to steer the growth of the company when they are in front of the investors. Then, of course, we have our strategic view. So financial position is one factor, but we also look at tech and people and also other factors to our business as well. Yeah.
Thank you, Iris. How about you, Ivan?
So I think I just mentioned that, show commitment. That's the key thing. But another piece of very personal advice is go try, but don't lose your shirt.
Thank you. Riala?
I would say the most important thing is for startup is collaboration. Because a lot of startup, they bring along with a lot of new ideas, but there is a lot of companies, a lot of investors, they need some new things. So I think if they can collaborate together, they can work it out like a small POC program that like Cyberport they have for fintech, or they can have a very small proof of concept. Then it works, then they will invest in a good way because it brings in new ideas and new tech and new stuff. So I think collaboration is going to be important, especially for these years.
Thank you. And obviously it seems, although the market situation is bad, still there are lots of opportunities, provided you tune it right and tune yourself up. And due to the time constraint, then I think we have to pass the floor back to the MC. And thank you very much, and thank you all of you to share your perspective and advices to all of us. Thank you.